It's Kyle from K Capital. It's September 7th, about 5 o'clock Eastern Standard Time. It's our weekly watch list here. I'm going to go over overall the general market to start. Right now, we're looking at the chart of the Dow over the last about year. As you can see, we broke down the 200 moving average or EMA moving average. In the basic drop off over the last 3 weeks here. If we zoom in a little bit, we can see that there's still some bearishness here. What I would typically call a dead cat bounce. We rallied all the way down from our prior low of 1550 up to 1660, but there's just too much bearish activity in the market. I'm still expecting new lows here over the next couple weeks. That's going to drive our general sentiment. We don't want to really trade against the overall market here, and the 200-day moving average is really the key indicator of what type of trend we're in. If you look at this, we really haven't deviated from this more than 5 to 10% over the overall bullish trend here for the last couple of years. And I think now that we kind of are coming out of that cycle, we're going to see a lot more short opportunities in the market, which I'll address in a few minutes in our watch list. But taking that forward over to our open alerts, we have a few long positions here that I think are overall pretty excellent opportunities. We start with Jack. Jack is a position we've been in and out of a few times, and obviously if we look back over the overall pattern here, it's a very downward trend. We started the baseline here and broke out over the 200-day moving average, which is one of the reasons we entered this position. If we kind of dive a little bit deeper and we look at the swing trading element of this, this is where I think we're going to see a significant upside, because we're going to trade with the general trend like I've been alluding to, and we're going to break through this triangle pattern here. And I think $15 price target in the next couple of weeks to months is definitely realistic here, given the overall trend that this stock has had. There's some bullish activity in terms of the news wires recently, in terms of their earnings and in terms of what they're actually looking forward to in terms of the Christmas season for some of their products. So I think the general story here is very good. I think the volume is supporting the overall trend, and I think it's something we might be able to start taking profits in the $12 range. Another one that has a similar setup is EMKR. Again, I'll back up a little bit here and just go back towards the overall 200 moving average setup. So let me back up. And it's one thing I think with EMKR that we have to focus on is the pullback to the midpoint of the candle. So traded above the 200 moving average here, pulled back, and it's been really following that for the last couple weeks. One thing I look for is really a breakout on high volume, and then a pullback to the midpoint of that. And that's exactly where we're really at here in terms of this stock. 675, if we were to zoom all the way out for the past couple of years, has been really a strong area of support, or resistance, I should say. And you can see we bounced along this level at multiple points. That's really where we're holding at right now. I think this stock is going to continue to trade with the overall trend. Again, over the 200-day moving average, on high volume recently, and excellent earnings over the last couple calls. So I think this is another stock that we're going to continue to hold. Right now, we're at our level of our mental stop loss, which is 675. But I think this is a position that's going to see new highs. Our current target's in the $8 to $9 range, as I alluded to before on last week's video analysis. So it's another position that we're going to keep a close eye on. Crown is another one we entered into last week. Again, it's one that's been trading pretty strong ever since it broke through its 200-day moving average. Ever since then, I think it's something that is going to continue to pop up. We entered similar to EMKR on the midpoint of the breakout candle, in the 470 to 480 range. So far, it's been playing out pretty well in terms of rallying from that point. I think it's something that our initial target of $6 is going to be pretty much guaranteed over the next couple weeks, unless there's some pending news. I say that because fundamentally there's been some really good analysis done and published on Yahoo Finance, The Street, and some other publications that kind of broke down the fundamentals here. Obviously, we're a technical trading setup here, so the fundamentals are key, but not something that we really base our decisions on. But it's always a plus to be trading along with the fundamentals and have that really support your thesis. So in this case, it's definitely supporting Crown. So it's another one that I think we're going to hold on to. I think right now we're sitting on a 7% profit in a week, which isn't too shabby, but it's something that I think we could definitely see a lot larger upside here. If we want to actually extrapolate that a little bit farther and we want to pull all the way back, if I go back to the 5 week or 5 year, flip to the daily, out. So this is one that has traded with this 200-day moving average pretty steadily. If we went all the way back in history, it broke down, prior to the recession, traded all the way down here, and it really has baselined, a few times. And when it did break the 200-day moving average, it rallied pretty hard from 2 to 4 here, broke back down, and then again, this trend has been really consistent ever since it really broke out. I think in late or early 2012. So that it traded all the way up the 200-day moving averages, and really we're going to just follow that trend right now. But looking in the short term, which obviously is what we're focused on, it's nice to see this level of support here, the midpoint of that candle. So it's a good thing that we traded where we did. And again, the initial target here is $6. Continuing on to our one short that's currently open is CSLT. Again, if we wanted to zoom out, we can see that the 200-day moving averages has been a really large key here in terms of really just following the trend. And the reason I say that is it hit that area here, I think back in 2015, late June, and really ricocheted right off of that all the way back down. So I think the bounces we see here, although they are bullish, they're always being sold into. So I think it's something that we're going to see for very shortly. I think the trend's going to continue to hold. Further indication of that is the fact that the 20-day moving average is continuing to be a significant level of resistance. So I think it's something that we're just going to continue to watch here. And hopefully this plays out when we hit our $4 target in the next couple weeks. Continuing on, there's a few things on the watch list that I wanted to talk about. First, to the long side, DHT is one that I think is a very interesting setup. Let me zoom out here real quick. So DHT has been beaten down over the last couple of years, but has slowly started to form a nice base in a long-term triangle pattern. So here's the base of the triangle, and here's really the resistance level. But the 200-day moving average has, again, served as a great indication of a swing trade that, we could have made some significant money on. It basically rallied above that at the $5 range all the way up to $8.50 and then pulled back. But when it rallied again and it kind of broke through that, it rallied, from 7 to 9. I think we're about to hit that target again walking into next week. So if we take a step back and we look back on the last 2 weeks, this candle here is really a significant level of support because really all the lows here were bought into during the day. And that just has served as really a nice indication to go from 680 to 742. So I think it's something that we're going to watch to see if it can actually break this level of the 200-day moving average. And if it can, we might go long for an initial target of 9, which will be a nice return for a couple week type trade. Another is ARIA. Now, ARIA was one that I had on our short watch list last week, just as a short-term day trade given the news. And that news was really, it had a nice significant pop here in terms of the takeover bid that I think they declined. So basically what happened is a competitor of theirs went in, basically offered a tender offer at a significant price, but they declined that. So the news initially sent the stock way up, but I knew that, that type of return, 30-40% of the day on that type of, news really was going to be sold into if it was declined. And that's exactly what happened. So we missed the short opportunity here. But I think for the long side, if we want to take a step back, we can see that this stock has been really beaten down, but it follows its 200-day moving average very well. And we can just look back in history as really an indication of that. So what I think we're about to gear up for here is a long-term trend to fill this gap. So that would be initial target of 16. We're baselining here and kind of testing the 200-day moving average, but I think it's only a matter of time before, we break that out and we continue to fill that gap. So we enter in the $8 range. We'd have 16 as our initial target, which would be 100% return. It just might be a longer term holding period, with a wider mental stop loss. So this is another one that's on the watch list for this week. And on the short side is KBIO, which has been in a constant downtrend since the recession, and any type of pop, whether we want to go back here, was sold off. Pop here was sold off. Pop here was sold off. And again, the pop here from 2 to, I think, roughly 5, I think it's going to be sold off again. And so I think we're going to look to go short here. There was some news, I think, significantly that I haven't dove into yet. I will before we execute the trade. But nonetheless, I think the overall trend here is really an indicator that we don't want to ignore. And I think it's something that we can easily short for maybe a dollar profit or 25% return. So it's another one I'm going to take a close look at tomorrow going into the week. And finally, TGTX, which we actually shorted, I think 2 weeks ago, and got stopped out around the $13 range. I think we shorted in the high 11s, the 11.95 to 12 range. So it's one here that I think is, a solid indicator of what to follow in terms of a long-term trade. And again, the 200-day moving average is pretty key. It broke down here, which was something I looked at for initial short, but I think the timing was a little bit wrong. So I think now that it's starting to break down this price, I think it's something that we're going to go short again, and just to hopefully watch this collapse. We'll have a much closer spread here in terms of our mental stop, but I think overall this is a position that now that it's broken down the overall trend, it had its nice rally all the way up from the sixes to the 20s. I think it's bound to pull back and follow the 200-day moving average again, just like it did in the past. So again, 2 shorts, 2 longs for the watch list. We have 3 swing trades open, 1 long-term trade in SD, and 1 short. So there's a lot on our plate right now. Again, just getting back to the overall market in terms of the Dow at least. We're going to be cautious in this market. At best, we're going to be pretty tight in our stops, and we're going to be more focused in terms of our shorts for any new opportunities. That said, there are going to be some opportunities to go long, and I think DHT is a prime example of one of those. So take a look at what we kind of just walked through. On the dashboard, I have all the analysis and the technicals posted in terms of the prices. If you have any questions, shoot an email to kcapital.advisors@gmail.com, and I'll talk to you guys tomorrow morning.